Hello, my name is Eytan Uliel. I am the Chief Executive Officer of Challenger Energy. Challenger Energy is an AIM-listed exploration company focused on the Atlantic margin, and we are almost entirely focused at the moment on some very exciting acreage in Uruguay. We are in fact the only company that provides access to this exciting acreage in Uruguay, and that has been the centre of all of our activity and all of our news over the last 12 months, which I think we're going to review now.
We are. We're going to talk about how things have gone. Like we saw you back here end of March this year, and we got a first run through from you. Tough markets at the moment. A case of head down and get on with it. Control what you can control. So, what have you been up to since I last saw you?
Well, I think the context in which I last saw you is we had just signed and announced a farm-out agreement for our Area Off 1 license in Uruguay. So Area Off 1 is a large offshore license. Uruguay as a location has become a very exciting exploration hotspot. In the last 12 months prior to March, whereas originally we were the only license holder there, the entirety of the Uruguay offshore was licensed and licensed to majors, Shell, APA, YPF, etc. So we were very excited in March to have signed an agreement where we introduced Chevron as a partner on the license. That arrangement was that Chevron would take a 60% operating stake. We'd retain 40%, which is a very large retained interest and gives us a lot of flexibility in the future. Chevron were going to pay us $12.5 million cash up front, and then they were going to carry us in an accelerated 3D seismic program and then partially carry us if they decide to go forward with the first exploration well. So that was in March. And at the time, we told everyone we've done it. We have to go through a process of regulatory approvals. And the rest of 2024 as regards to that asset was those regulatory approvals. They took a little bit of time to get through, not because there were any particular issues, but just this is the very first farm out being done in Uruguay. And so there were procedural steps that almost had to be developed as we went. But at the end of October, we closed the deal with Chevron. So we've received payment from Chevron. They've taken over operatorship. They've now begun working on preparing for a seismic campaign. It's a large seismic campaign that will take the block forward, and the plan is for that to happen early in the new year, so on an accelerated basis. And from a corporate point of view, we received the money from Chevron. We settled up all sorts of outstandings. We end the year, therefore, with a very large, healthy cash position. In fact, we are in the best financial shape this company's been in for the last 5 years, at least since I became CEO. So that was Area Off 1. We have a second block in Uruguay, Area Off 3, which is as exciting, if not more so, than Area Off 1. And during the course of the last 12 months, we've quietly been going away doing the technical work that we've said needs to be done, which is similar to the technical work we did on Area Off 1. In the case of Area Off 3, we've licensed the historic 3D seismic. We're in the process of reprocessing it. We're starting to see some really interesting and very positive results there. And as we've communicated to our shareholders in the market, we expect that work to be finished in about March, April of next year, and then there'll be a couple of months worth of time for interpretation and mapping and volumetrics. But what we're hoping is that by the middle of next year, we can kick off a farm-out process on that block, very similar to the one we ran on Area Off 1. And by the end of next year, we'd like to be in a position where we can say, well, hey, here's the partner we've secured for Area Off 3. So both of our core assets in Uruguay have progressed exactly as we said they would, completely in accordance with plan. And from a corporate point of view, we're in a great position. We've well-funded, fully funded in the jargon. We have all of our work program commitments for next year paid for. We know exactly what we have to do next year. And if everything works well, this is all leading towards some important decisions in 2026, which will then bring drilling, ideally on both of our blocks in Uruguay, during 2027.
Okay. So let me understand. So the $12.5 million you received from Chevron, that's yours. They paid that to you, but they're gonna take operatorship.
Yes.
Off one. Okay. So the $12.5 million, you use some of that to kind of, I guess, pay stuff off, and the remainder are you going to use for what purpose?
Well, we've got the costs of staying in business. We have a very lean corporate overhead. It runs at about $2 million a year. We also have to pay for the technical work program on Area 3. And the technical work program in Area 3 will have a cost of around $1 to $1.5 million. So, and then Chevron will carry us on virtually everything on Area 1. So between those, we'll see the work being done. We'll spend about $3.5 million next year. And against that, we receive 12.5. So we'll have a fairly hefty surplus at the end of 2025 to carry us into 2026. As I say, we'll be looking at a similar sized farm down of Area 3 as to what we got on Area 1. So, things are looking pretty good on the 2, 3, even 4-year horizon for this company.
Right. And let me understand the precise terms of the Chevron deal. Okay, so you've got $12.5 million out of it, and they'll assume all the costs and carry you on all the work they're going to do on off one. But at any point, I guess they get to check out and say, actually, this doesn't meet our criteria. We're off. But so, what is the process they're going through? And how much input do you have, or how much feedback do you get to understand their likelihood of progressing?
Well, yes. So as you say, $12.5 million banked, that's ours. That doesn't change. They are obligated to undertake a 3D seismic campaign. So there's no backing out of that. That's what they farmed into. The carry arrangement we have is we get carried for our 40% of that up to a total seismic program cost of $37.5 million. That will more than cover the anticipated scope of the seismic. We're looking at a seismic campaign in the range of about 4,000 square kilometres that will cover all of the areas of interest on that block and fit well within the cap. So we're not expecting to have any, material expenses there. That is all. So the first exploration period of this license expires in October of 2026. Okay, and so all of the work Chevron's doing, the seismic acquisition and then all of the interpretation that follows that is all with a view to being able to decide, do we or don't we want to continue with this block into the next exploration phase. So there is where they do have a decision point. They can say, look, it doesn't meet our requirements, it hasn't stacked up technically. You'd have to assume the odds of that are reasonably low. It's not too often that people shoot 3D seismic and they go, everything we thought of was wrong. 3D seismic is usually about putting a lot of definition around what you already know from 2D and better quality data, being able to really understand where you might want to site a well, etc. But anyway, if Chevron decides in mid-2026 that they want to go forward with a well, then that is a well that would get drilled in 2027. And our agreement with Chevron is that they would then carry us for half of our share. So hypothetically, if you assume a well would cost $100 million, probably be quite a bit less, but hypothetically, if you said 100, our share of that at 40% is $40 million. And Chevron would pay 20 on our behalf, and we'd have to come up with 20 to fund our share. A thing that a lot of people have overlooked. I mean, if you go and look at just about any other farm out that was done in the last 12 months, a retained 40% interest is a very good outcome. That's the thing we fought hardest for in the negotiations. And the reason is that it means if and when the time comes to fund our share of wells in the future, we have 40% that we can trade. We can sell another 20% interest in the block. There'd be no shortage of people interested in farming in at that point in time. So we're in a very good position that, but that, I think that answers your question, the sequence and the terms of the deal we have with Chevron.
Yeah. And so just remember the 2D, was the whole area done in 2D originally for them to, or partially done in 2D? And what are they basing their decision on to actually do the 3D?
Yes, so Area 1 had a lot of legacy 2D product on it, some dating back to the 1970s, but the most recent was sort of 2011, 2012 vintage, right? What we did is, and the work program we picked the block up on in the first place, is we went and licensed all of that historic 2D picked the bits that we thought was most amenable to reprocessing, and we handed it off to some tech boffins who specialize in this stuff, and we reprocessed about 2,000 kilometers of historic 2D. And in the course of the reprocessing, two things happened. Firstly, we saw greatly improved data quality, newer processing techniques and technologies that allowed us to identify two hitherto unidentified prospects of real scale. The volumetrics on those were several billion barrels of oil potential. And we were able to subject the reprocessed 2D to AVO, amplitude variance with offset analysis, which is the thing that was ultimately the key to unlocking some of the recent big discoveries in Namibia, and which has kind of become a de facto standard now in the industry for looking at these types of offshore blocks. And luckily enough for us, these prospects we'd identified had really good, strong AVO signatures. So it was that body of technical work we did and that new data set that we took to the market in a farm minute, and ultimately that's what Chevron reviewed, agreed with, and said, right, we like what we see. We're now prepared to commit to the cost of 3D seismic, which will, as I say, go back over the same area but provide much greater understanding, imaging, etc. And then if that ticks a few boxes, you move forward into drilling an initial well.
Right, okay. So just on the structure, so 40% free carry, you could flip half of that to another group, which then leaves you to basically for your portion of the spend on the drilling when it comes to it. You're sitting on a proper free carry then of 20% is your hope. So I need to understand, so who would these types of groups be that would come in and maybe pick up your share of the drill cost when it comes to it? What sort of companies are those? Other drill companies with Chevron?
Yeah. Look, I mean, when we ran the farm, you have to understand the context here, okay? In early 2022, some very large discoveries were made offshore Namibia by Total, by Shell, and more recently by Galp. And when I say large, these are, mega discoveries. And Namibia is the orange basin in Namibia where these discoveries are made is the direct conjugate for the basin in Uruguay where we are. And you can now seismically correlate the two. So the risk profile of Uruguay has diminished greatly. And that's not just me saying it. 2 months after the discoveries in Namibia were made, Shell, APA, YPF, they swooped into Uruguay and took out every single available license in Uruguay besides the ones we had. Equally, there's activity going on in the waters of northern Argentina, and in December last year, a whole group of licenses adjacent to Uruguay in southern Brazil were taken out by Chevron, by Shell, by CNOOC, by Petrobras. So, the licensing interest in this part of the world has skyrocketed in the last 2 years because of what's happened in Namibia. And it's still a long way to go, but it's a big step in the de-risking. Now, all of that, when we went out and ran our farm-out process for Area Off 1, it was a heavily attended farm-out process. We had lots and lots of companies participate, all the brand names you would expect, plus some. And it was a competitive process. Ultimately, we chose Chevron because they made us a great offer and they've proved to be an exceptionally excellent partner, just really respectful of the dynamic that they're a big company, we're a small company, not out to crush us. And, so it's been a great relationship with them so far. But in terms of who might be interested in getting into this, there's all these other companies, people involved in Namibia, people already in Uruguay, a lot of industry participants suffering a little bit of FOMO that they've missed out now and who'd want to weigh in. And like I say, we are the only junior company there, and we've got 2 blocks. We're the 3rd largest acreage holder in Uruguay. So there won't be a shortage of people to talk to. people have to get into the and there are plenty of parties who like to come in behind major international operators. So the fact that we have Chevron provides a huge amount of validation, and you don't have to look too far to see who are the other sorts of oil companies who typically farm in after Chevron, Total, etc. That's the idea, anyways.
Okay, so there's the hypothesis, and I've been to Namibia and I've seen what's going on there. They've got a hypothesis that obviously this basin kind of was at one point joined up and has separated, and they've got after it in offshore Uruguay and elsewhere. How much work has actually been done? And has anyone? I mean, it's like you said, it's early days, but has anyone actually got any early indications? Has more 3D being done, and has anyone actually started any drilling offshore
In Uruguay?
Yeah.
No. So
okay.
There is, Chevron/we will have 3D on area off one. There is existing 3D in Uruguay as part of our program on area off 3 that's being reprocessed. I know that, Shell and Apache have obligations to shoot 3D. There's 3D going on just over the border in Argentina. And then Apache have a commitment to drill the well on one of their blocks, area off 6. That has to be drilled sometime before mid-2027. So, no, the activity is just starting. And in some ways, the way to think about it is Uruguay in general and Challenger Energy is we're where Namibia was 3 or 4 years ago. So things have to happen, there have to be successes, etc. But all the ingredients are there. And interestingly and parenthetically, one of the other things that happened for us during the last 12 months is we took in a strategic investment from a New York specialist energy investment fund called Charleston Energy. And they are now one of our largest shareholders, and one of their people, Robert Bose, joined our board around the middle of the year. And the whole reason that they did this, Charleston were one of the cornerstone investors in a company called Sintana, which has been the great Namibian junior success story. They're partnered on the block that Galp made a discovery on, and their share price has gone from whatever it was to $300 or $400 million in the last 12 months or so. And so Charleston said exactly that. Well, you look like Namibia looked 3 or 4 years ago. And, things may or may not follow the same path, but at least from the starting where you start, you have all the potential to repeat the Namibian success story.
Right. Okay. And let's try and understand what investors are into here, because obviously when we met back in March, I think you were at 7p and it's now saying at 5.25. It's gone down. People either unsure of the risk or unsure of the oil market or other reasons. Have you got a sense of what people are thinking or why they're perhaps not loading up?
I'm completely perplexed. I guess you'd expect me to say that. And we would have really expected to see a fairly good re-rating of our share price over the last 9 months. We've done everything we've said we're going to do. You can do the maths. It's on our website. We even put it there with some of the investment banks. They did the maths on what the Chevron farm out alone means for our share price. If you work out the value of the cash received and the value of the carry received and divide it by that, that's 4 or 5 times our current share price, our current market value. So why has the market not given us any credit over the last 9 months for what we've done? Well, one option is it's like, they're waiting to see. And, as we continue and we tick off, you can never really predict what's going to finally catch people's attention. But all I can do as the CEO and all our team can do is just work on delivering the things we said we'd deliver, get the seismic underway, get the work product done on F3, get another farm out underway, and sooner or later, something will catch the attention of the market and you'll see the re-rating you hope for. The other thing is maybe the nature of the market has changed and the things people care about has changed. A few people, I've been around to see a few of our larger investors. Fortunately, our larger investors are all in this for the long term and don't really care what happens today, tomorrow, next month. They want to see the outcome at the end. You know, if this thing works a la Namibia, then everyone will be very happy. And if it doesn't, it doesn't. That's exploration. But they've all said to me, you know, the nature of the aim in particular, frontier exploration in general has changed a bit. And whereas in the past, people really got excited about farm outs and seismic and all, really the thing that excites people is just drilling. And until you get a little bit closer and have a bit more visibility on when and how wells will get drilled, you'll just continue to sort of, you know, drift along, which is kind of disappointing, but it is what it is, I guess. And certainly from my point of view, over the last year, I've continued doing what I've been doing for the last 5 years, which is at every opportunity I can, increasing my shareholding in the company. I've now got 6 and a bit percent in, you know, directly, and I have a bunch of options as well. It's part of my job. You know, and I'm in this for the next 3 or 4 years. I'd like to get to the point where wells are drilled, and we'll see what happens. But until then, you know, I'm not in a place to control the market. All I can do is deliver the things we said we'd do, and 2024 has been a year of doing exactly that.
Okay, you know, I hear what you're saying. I think it's hard to read the market at the moment, and it's hard for the market to read what's going to work. And I've been involved in $100 million offshore dusters, you know, and it's kind of painful process to go through. So waiting sometimes is the right thing to do if that's your risk tolerance. Look, let's just talk about the things that remain in your control and what you've got to set up. You mentioned obviously doing the seismic with OFF3. How far do you, given what you've done before, how far do you know you've got to take that before you can sort of have meaningful conversations with another strategic there and do this kind of cookie cutter repeat process?
Well, the current plan is we kick that off 1st of July next year, you know, early July next year. There is a chance we might be able to front end it a little bit. We do have some learnings from the process we ran with Off1, how to accelerate things and compress the frame and so on. But the thing that I've learned from Area Off1 and other things is that it doesn't matter how big or small you are, and it doesn't matter who you're talking to, you have to have something to show people, something new. This is a data-driven business, you know, and it's all very well to show up and wave around a piece of paper and say, hey, we have a license. You don't get nearly as much credibility or value for that as saying, hey, we have a license and we've done some really interesting technical work, and here's something that you maybe didn't know. And that's what you have to be in a position to do. So we're doing all the technical work now. As I said earlier, we hope that the first phase of that will break the back of that by March, and there's a bit more time for the interpretation, mapping, etc. But it's that work that will bring us to a place where we can have meaningful conversations with people, and we'd like to be doing that by the middle of next year.
Okay, interesting. Well, look, I guess come back on when you've got something more to tell us about that process. I'm intrigued to sort of see this through to whatever conclusion that it reaches. So appreciate your time today. Thank you very much for the update, and we'll see you soon.
Have a happy holiday. Ciao. Thank you. Bye-bye.